Okay, let's get into the market moves on the S&P over the last couple of days. Thursday, the 5th of March. I didn't make a video yesterday because I was busy. And I've taken quite a few trades and quite a few losses. As you can see, 5 trades and £667 down on the week. That brings the losing streak quite severely up. And I'm going to take this time to discuss my thoughts and the main points that I really do need to be implementing, because on this third trade that I took today, there wasn't like any feeling towards it, which can be a good and a bad thing. But like, I think it just got to a point where the losses had, or it's gotten to a point where the losses have like tallied up in a row, that like a winning trade seems like such a stretch, even though it shouldn't be. And it's just something that I need to investigate. And I was investigating. I was having a proper think about it today and this afternoon. Like once I closed the charts, and what is like the ultimate thing that is stopping me from, well, what is the main problem? And it's over trading. That is the main problem. I set a one trade max for myself, and as you can see in the last trade of the last 2 days, I've placed 5 trades. Now it's as simple as this. I need to stop treating my funds like numbers on a screen and start treating my trading like a business. And I've had to say this to myself countless times. Like, you can see on the days where I do lose, you know, granted this will be as my equity has increased in the account, that the biggest losing days here are most likely days where I've taken multiple trades. And we can see this again here. 3 trades, massive loss last month. 2 trades there on a losing day. 3 trades, big loss. 2 trades, big loss at the time in January. 2 trades, 2 trades. And all the days where I win is one and done. 3 trades there again, 2 trades. And it's a spiral thing. It's very, very psychological. And yeah, I mean, I'm not going to trade for the rest of the week. I may even sit next week out, or just completely limit myself to trading on Wednesdays, because that is the highest performing day for my model at the moment, or the break and retest at least. And then if, previous daily high to previous daily low model plays out, then I can look at taking that instead, since that is like a swing trade. And I think that's just how it's going to be. I mean, if I look back to, I don't know, when was I trading the other model, not this one. So I think it was from about June. Like, you can see there's still quite a lot there. July, August. It seems like such a little amount because it was such lower capital, so it's a bit more difficult to determine. So where are we here? August 2025. If I look at the 8th, about grand down, or 800 down there, and that's on the overall P&L. And it just seems to be, you look here, that's hardly any trades in September, but I was away for most of that. Just less trades in general. Good month in November. And Yeah, I think what I need to do is stop putting so much emphasis on the break and retest. That's going to be key. Um, and just trade that on Wednesdays and then only look at the charts to see if the previous daily high or previous daily low has been swept and we get an inverse fair value gap off of a higher time frame point of interest. And I think by really putting that in place, this is going to make the difference. Um, and like I say, the most important thing for me is going to be one trade max per day. Like if we go into the notes from yesterday, how am I? Busy at work. It's sunny. Writing this before heading out to lunch. Just gone 8 o'clock. New York, so waiting for the 15 range to form. Previous session highs and lows marked yet. Today's Asia low swept before London session. We'll get into the full thing, but look, we put no trade, hesitation here, but also strict following of the rules. There wasn't a breakout from the range, only wicks. Done for the day, but currently feeling a bit of FOMO now that I've missed the move and it's a Wednesday. Price has since broken down. It's now trading within the inverse fair value gap below the range and the 5 minute fair value gap. You can see impulse trade loss. That could have been a day net P&L zero with no trades. Save myself £238. Learning, and I say I'm done for the day, close the fucking charts. I was a bit like angry that I'd actually placed that trade. One trade max. The model plays out. Do not chase the next move. Learn to be okay with closing the charts before 9:40 if necessary. Always another trading day. Just entered long. What am I doing? Closed early because I'm spiraling. And I'll get into this in a sec, but this move, this second one that I placed was actually correct. It wouldn't have hit stop loss and it would have gone to TP. And my initial bias of the Asia high that I was targeting did get taken. So in that case, this impulsive trade was wrong and this impulsive trade was correct. But the fact is, they were both impulsive trades. And yeah, you can see here after closing that trade, price did actually push up to the initial bullish bias. The loss beforehand threw off my psychology, bit more salt in the wound, but that's why I learn. And then price runs to Asia high. So that's an accumulation of two trades. I closed the second one early for like £80 loss. This one today, the first trade in line with the model, perfectly fine. 7 point stop loss just because we had an 11 point range rather than a 10 point range. And then, yeah, we'll get into it. But the things I need to put in place are these. I'm actually going to write this down. Just so I have a note. One trade max per day. The second note is going to be only trade opening range, break and retest on Wednesdays. Only look for PDL, PDH model after reaction from higher time frame point of interest in line with entry criteria. Space losses out over a month rather than one day. These are my 4 learning points for the day. And just in general, these are going to be very, very key. And I think I'm going to put like something like this on my lock screen on my phone. So when I'm trading and I look at my phone, it's there. And that is just going to constantly remind me to stick with it. Because once you take so many losses, or at least I've noticed, you know, on a losing streak, the money turns to numbers. Numbers turns to gambling. So these are my main points, and I really am going to implement this. And I say this, and I have to remind myself that this is a business, and it's not just gambling on a chart, you know. So yeah, I really did sit and think today after these losses, because, you know, I had all of these expectations coming into March, you know, saying that this was going to be a good month, I'm going to trade less. And in the first 2 trading days, I've placed 5 trades. Where is the disconnect happening? And it's from not closing the chart after 1, the model plays out, and 2, just placing the trade that isn't there, or like even after I take a loss. And I think, well, I feel like there might be something to do with the size of my positions, and just like the money that I can gain from a winning trade to a losing trade. Like at the moment, my stop loss is about 130 to 140 pounds, which is 2% risk, and a winning trade can be anywhere between like 350 to 470 pounds, depending on the balance at the time. So with my current balance, let's say 3 to 1 here. Now with the current balance, £398 for £132 stop. Yeah. If I did say 1.5%, £100 for 300, that's a bit cleaner. But if I just did 1%, 191 for 63. You know, you lose £63 in a day. It seems a bit less of a dent in the total balance. But even right now, as I'm like explaining this, I'm looking at these numbers and being like, well, what if I place the same trade with 2% and I make 400 instead of what, like 200? What if you place the same trade with 2% and you lose let's say 380, no, 360 instead of 120? You know what I mean? It's all relative. So yeah, there's a few things. But like I say, these are the main points here. These are the main points that I've learned today. And, you know, I'm not going to change my strategy. I'm just going to stick with what I know. These 2 entry models, opening range, break, and retest, previous daily low, previous daily high. They are simple, and they're 2 different models. One's a swing trade, yes, so you're waiting, you know, either like a full day, or, you know, you're aiming for the previous high or low, or the previous daily high or low. It doesn't play out as much, it's not as common, but it will supplement the Wednesday opening range, break, and retest. So yeah, that is my current thoughts. And with that, let's get into the actual trades that we took. I don't think I have all the drawings on the charts, but we'll go into yesterday's first. So as you can see, it's a bit of a mess on here at the moment, just because I've got 2 days worth of drawings. But if we go into here and then view the notes, can I full screen these notes? View details. View my day. 4th. Here we go. Right. So, how am I? Busy, sunny, previous session highs and lows marked out. Yesterday's high, a potential bullish draw, although the PM was swept earlier. So, in terms of that, let's go into here. And I'm talking about this high up here. and this was the move. So you can see we had the two lows here. The Asia low got swept. London low seemed pretty clean, and there was a strong move upwards. And the PM high got swept, but on the 1 hour chart, you can see it's a pretty strong bullish model at the moment. It's sold off now, which is a shame because my initial idea today was bearish. But yeah, so let's get into it. Pretty much, we marked out 15-minute 8 a.m. range. Right away, this is like 29 points or something. How many points was it? 15-minute candle range, 29 points. 1 minute order block sits on the midpoint. 8:15 news created the range. So we had 8:15 news, which was non-farm employment change. So that created a big move up in line with current bullishness on the day. And that's this candle. And then that 1 minute order block that I'm referring to is, let's just scoot across here, is here. I'm going to stay on the 5 minute just because we're already 2 days behind on price action pretty much. And every time I change the time frame, it's going to reset. So yeah, the midpoint, as you can see, is this line here, and that's where the entry would have been. Obviously this is before 9:30, but this could have been an entry off the midpoint of the order block rather than the 15-minute range. That would have almost traded up, and then just at the open would have come back down, almost stopped us out, and then hit TP on the open. As you can see, that comes across there. At that point, I should have been done for the day. That's the idea. It played out. That should have been done for the day. What happened then was, because we'd hit that and tapped this fair value gap on the 15 minute, and that's where we're at. 15? Or was it 30? Was it even the hourly? Yeah, we traded up and tapped this. So I was thinking, maybe because that's happened, I'll just watch, see what happens. We got this inverse fair value gap. And then price traded below that. And yeah, pretty much there was a few candle closures. Oh my God, this can take ages. There's a few candle closures below this inverse fair value gap and at the bottom of the range. Now, I took this as, prices respected the bottom of the range. Let's go short for 3-1. And this was just a manipulation down around 9:45 before the reversal at 10 o'clock. As you can see, at 10 o'clock, we had more news come in and price shot up from there. And yeah, the reason for this being, if we look at the 30-minute candle at that time, I'm going to have to zoom in again. You can see this candle here closes above that inverse fair value gap, whereas I entered on the 1 minute. And as we know, the higher time frame often dictates the lower time frames. So with all that in mind, that was a pretty quick stop loss, and I got that one wrong. This was very impulsive. I didn't need to take this, and my initial bias for the day was bullish. So if we come into my notes, no entry, maybe unlikely due to size of range. Idea is to wait for a breakout, watch our price trades around the range. 904 price still within the range, moved upwards from the 1 minute order block midpoint. News at 10, still no breakout from the range at 925. Retested midpoint, would have gone straight to TP. So if I had entered on that midpoint test, even though it was before 9:30 and price hadn't broken out the range, then that would have been TP. So really, I did the right thing not entering that because it wasn't in line with my rules. I was sticking to my rules. And yeah, no trade, hesitation here, but also strict following of the rules. There wasn't a breakout for range, only wicks, done for the day. That should have been it. I shouldn't have had to write all of this. This should not be here, but it is. So we're going to go through it. Into the short off the bottom of the range after 3 1-minute candle closures, closed below the inverse fair value gap. Stop loss hit within a minute. Ouch. No clear target other than the 3-to-1 R, which is fine. Just went almost completely against everything I typed above. Doesn't feel great. So yeah, and then that comes into my, like, there was a little bit of frustration here, or not frustration, but like just like what am I doing? You know what I mean? And then after that, I entered long in line with my initial bias. You know, price traded up above the inverse fair value gap, tapped it, and then moved up. So my entry was around this candle here within like a couple minutes of getting stopped out. And it's like the psychology skewing of this loss and then going straight into another trade. My mind doesn't deal with it so great. And because of that loss, and you know, obviously what I said going into this month, less trades, this wick, I closed on this wick here, knowing that we had, I closed on this candle coming down, actually, thinking it was going to be a continuation downwards. And yeah, so that was the second loss. So this line up here is really meant to be like here. Yeah. And then let's move that back. Whoops. So yeah, unfortunately, from the 10 a.m. news, price completely jumped up from there. And yeah, we had one final pullback and then rocket ship through this fair value gap, through the Asia high. And yeah, bit of a stinger. It was a bit of a stinger. So it is what it is. This is why one trade, you miss it, stop. One trade, you lose it, stop. You know what I mean? It just makes sense to do so. And now we come into today. So what was I looking at today? Let's go into my notes. I'll just get them ready, and then I'll move that down here. How do we go? Day view. Let's do today. Why can't I view the whole thing? What's going on? Should just be able to do that, right? Okay, so it's not letting me go straight in. Right. Thursday, feeling bearish. 8 a.m. range is 11 points. Price breaking down toward the volume imbalance in yesterday's AM session. So that's that little 10 a.m. news gap I was just talking about. The AM low could be bearish target before move up to PM high. And wait and see the reaction of this volume imbalance. Trade markers are lined up, which is just like the position thing here. And trade markers are lined up, but be cautious depending on the reaction. Also noting it's Thursday, which historically has not been a very successful day for me. Hence why I'm only going to trade this model on Wednesdays. So limit order filled short at 9.33, 7-point stop loss because of the 11-point range. Stop loss at 9.35, followed rules and done for the day. Now, that is this trade here. So let's go in, mark out the range, break away from the range. That's the volume imbalance there. Come back up to this midpoint range. I was put in short here, so my initial trade was actually something like that. As you can see, wicked out, which is unfortunate. And then price trades down, retests that range. So if I had taken this trade, it wouldn't have been enough. But if I had taken that trade with a 5 point stop loss, shoulda, woulda, coulda, um, then we could have done a 3-1, pretty fucking sweet. So it did play out there, but not very cleanly, which is the main thing. So my reasoning for going short here was, price traded to the bottom of the range after tapping that, and that reaction enticed me back in. And you can see we came down a bit. Price came close to the stop loss and then dropped down again. And all that was happening here is, as you can see, creating this, and then we got this fair value gap like across this point here for price to continue upwards off. And this one I was just like, I'm going to stick with my initial bearish bias, as I learned from yesterday. I'm going to stick with it, and if I get stopped out, I get stopped out. And I did. And then this third trade, I'll get into this reasoning. I'll get into that trade afterwards. So my bias for today kind of aligned with the previous daily high to previous daily low model, which would have actually played out. Well, it's on its way to playing out, as you can see. So in terms of that, what we're looking at, well, on the 30-minute chart, we have an inverse fair value gap from a couple days PM high, Mondays, fine. Price trades up into that during the Asia session, breaks down, nice reaction. This is around the previous daily high. You get that inverse fair value gap. Price trades down again, breaks structure here. You could enter short off of this in the Asia session, or if I wanted to wait or I wasn't looking at the chart, I could enter short basically off any of these retracements into the fair value gap. Probably this one between the Asia session and the London session would have been the best, with the stop loss above the inverse fair value gap. I would have probably had it a little bit tighter, so I might have even got stopped out on this if I was to take that. But it just goes to show I was implementing this to generate my bearish bias. And I thought after that second trade, fuck it, let's just take a long and go for the previous daily high, because we have Asia high and London high are relative equal highs, and that would have been the target. And this is the one that I felt very strange about. So I'm talking about these notes here. 3 trades, not like mad or anything, just like, what am I doing? Now burned through 1.4K since making this last deposit. That third trade really felt like gambling, but there was a lack of concern about anything going into it, like a numbness, something that isn't adding up in my mind about this. I think I need to only trade on Wednesdays. There's a lack of correlation to the fact that I'm spending real money at the moment. So that's what's caused me to come to this conclusion about losing streaks. When I'm on a losing streak, it tends to be less focus on what I'm doing and more focus on just the numbers on the screen, and it becomes more impulsive, more gambling. And I've thinking back to it, this is how it's these are things that I've done since starting trading years ago. It's things I've done for years, and it's that spiral. It all comes down to overtrading ultimately, which is the main thing I'm getting at. But it's why does it happen? It's you lose that sensitivity to what you're doing and that edge. It's like a blade. Say your edge is a blade. You keep disrespecting it. You keep disrespecting that blade, and it eventually goes dull. And when you got a dull blade, it doesn't cut right, and that's the numbness that I'm feeling. That's actually quite a good way to think about it. No, I'm thinking about it. Do you know what I mean? And it's just that. It's just disrespecting my edge, disrespecting myself, disrespecting my rules. It adds up, and then it feels like little defeats, and then it just becomes to the point where it is, you just fuck it, let's take a trade, just to take a trade because I've already lost so much in a row, it doesn't matter. And then it just spirals like that. And that's really something that has been on my mind since I closed the charts today. And it's like, well, how do we get to the bottom of this? What do we do? And it is, the answer is simply just fucking one trade per day. That is it. And then just have like set days and times that you're going to do it. So I know the previous daily high, previous daily low model does work quite well on Thursdays. From my FX replay back testing. Right. So if we go into here and then look at what's going on? What's going on? 2 pages. This one. How do I get stats on this? Analytics. As you can see, I did like a year of back testing on this. Drawdown, average drawdown, 6.3% peak drawdown, simulation performance. Total winners, total losers. How do we do it by day? Performance by the day. Right, so Tuesdays and Thursdays are pretty good for the previous daily high model. Thursdays has a lower loss rate. And Tuesday has a lower loss rate. Thursday is a bit higher loss rate, but it's the highest win rate with this model. Plus Friday kind of works sometimes, but it's, hit or miss. Friday's hit or miss. So I'm actually going to make a note of this as well. Works best Tuesday, Thursday, and Friday. Works best Wednesday. So Monday, yeah, is okay. Wednesday for that model doesn't work as well because it's typically the expansion day in the week. So you think of like Tuesdays and Thursdays, there tend to be like pivots where like you get you get like the weekly high, the weekly low put in before the expansion on the Wednesday. That tends to be the case in general. Not every week, obviously. There's many different types of weeks you can have, but if you just think about a basic candle formation, the results here provide that. And if we just go into like, you can see Thursday, Tuesday, loss, one on Monday. Like they do appear on Fridays, like say for that month, better on Fridays. It all just depends. But nonetheless, this is important to note, actually looking back at this. And this one works better on, I'm not actually sure what I was trading more. I think I might have been trading a NASDAQ a bit more. How do I trades? USA Tech 500 tech. Can I go to the next page? 500 tech. So the majority of them were NASDAQ by the looks of it. Yeah, okay. Look at NQ for this more. I'm just going to put it as NQ. I know I don't trade the futures market, but I'm just going to put it as NQ just because easier to type. Does play out on ES, but more data collected for NQ. Okay, so now as I'm like actively working through what's going on, we can start to identify the gaps and the holes and the improvements. And then yeah, after this loss, you know, I was just like, fuck it. I'm just gonna go into a demo account and place a short trade because I thought, you know, the AM high from yesterday was getting taken. That was my main idea. And I just placed a short trade on the demo account, and lo and behold, that was the one that hit, and that was from about this entry here. So yeah, kind of typical. As you can see, prices retraced during the lunch hour, expanded down again, pulled back here, and this is going to get taken in the PM session. I have no doubt because we've got the London low, the Asia low, and this fair value gap down here. It just makes sense. This is going to get taken in the PM session. So yeah, that's quite a long video today, but it needed to be done. Not the start I wanted to the month. This was just, you know, the curve of the trend. Get rid of that. Not the start I wanted to the month, but you know, sometimes you just gotta take the learnings and implement them, and that's what I haven't been doing. I've taken bits and sort of been like discretionary about it, in terms of like, oh, which rules am I going to use today? Oh well, this kind of looks like this on the chart, so I can just like disregard that rule for now because the chart looks like this. And it's like, no, man, can't, doesn't work like that. It doesn't work like that. I've set these rules for a fucking reason, and I need to trade them accordingly. Do you know what I mean? But yeah, I'm gonna figure out a way to get that looking clean. Might even just take a screenshot of it, to be honest. I'll have to do it after this because I'm screen recording. But yeah, simple as that. Going into tomorrow, I'm not even going to look at the charts tomorrow, to be honest, like at all. Probably got red folder. Fucking shitload of red folder news on a Friday. I'm not touching it, not bothered. So yeah, F1 weekend, finally back. Gonna enjoy that. Have a chill one. Recoup, see what's going on, and yeah, just for complete transparency, net P&L, what is that? Just today, net P&L on my live account is 3.5k. I'm down 3.5k, 1.4k of that in the last 2-3 weeks. Not great. So yeah, it is what it is. Full transparency with me here. You can see everything that I'm doing. This is my journey. This is just my journal. Like, this is just like how I'm documenting it. Yeah. Now that it's all laid out, writing the problem down, you're solving half of it. You know what I mean? So next step is action. Like I say, repeating myself. That's going on my lock screen, the notes, and then we'll move from there. I will catch you on Monday. I might do, yeah, no, I'll catch you on Sunday. I'll do a market recap for Friday, just see what was going on. And yeah, I'll see you then.